So currently BlackRock and Vanguard together hold around $100 billion worth of gold and silver through their ETFs that they're offering to their clients. Very important alert, I just received that if the new nominee for the Federal Reserve, Kevin Warsh, is actually the real new Federal Reserve chair, there is a huge likelihood that these guys most likely will unwind their positions because gold and silver will underperform under the new Fed chair. Ask yourself, is this a hype or not? Remember, BlackRock and Vanguard are hired by the investors indirectly by buying into their ETFs, right? Outperform the market. They will not be holding on losing positions billions of dollars, right? What they're going to do, they're going to feel the sentiment is changing. They're going to move money, allocate. No one says that they're going to liquidate everything of these $100 billion in their ETFs, but we should agree that the COMEX futures that currently are positioned at these levels have a cost basis that most likely will be hit. Here, you're going to find out why. If you look at the numbers, broken down by perplexity, pulled out from Bloomberg Terminal, you will see that the BlackRock $100 billion gold silver ETFs holding through the COMEX futures order book will simply be empty. There will be no buys and sells. There will not be a competitive gap in between the spread that usually you will see on the markets. When the futures markets open, you will be able to see now the difference when the normal market conditions appear. $3,500 a gold entry price and average cost basis is what most of these guys, Vanguard and BlackRock, are looking. What does it mean? This means that if the price actually goes below 3,500, these guys will be running on loss. Same thing for the silver. $50 is the approximate cost basis for entry price average cost for either BlackRock or Vanguard. So what this means, if the silver goes below $50, well, a lot of these guys will be underwater. So like I said, they will not be holding like individual investors on losing position. This is why individual investors are losing money constantly, because they are attached emotionally to the investment. Like the previous video I did, I show you the exact numbers. 17% dump on silver, 12% dump on gold, and people, oh, it's gonna go up. Guys, don't sell, right? They're emotionally attached to their investment. They cannot comprehend real information. Well, Wall Street, they wake up, market is down, cool, I'm gonna short it. The market is up, cool, we're gonna go up long. Regardless, actual securities, derivatives, we're gonna go on the option market, right? They just go with the flow. They don't have emotional attachment. They don't care about the stocks. They don't care about the gold. They don't care about the crypto. They just follow the price action. This is why Wall Street usually makes money and very, very unusually loses. But individual investors are always wiped because they are so attached. No, it will go up, and they keep holding and holding, and things are going completely nowhere. Look at the second point over here. If BlackRock and Vanguard actually dump their positions that are equivalent of around $100 billion, they will be cascaded liquidations, and there will be $500 billion worth of margin calls. Why this is a big deal? Because on the flip side, you have the actual miners who participate in the gold prices through the production, right? So if you look at the $500 billion liquidations on the exchanges through the leverage positions will directly pause miners' work. Miners will hold production if the prices of the gold hits $1,800. They will shut down. They most likely will let go employees for a couple of weeks, unpaid leave, right? And then if the price doesn't stabilize, most likely they're going to shut doors because the production basis for them, it's not worth the hassle. Second point over here will be the cascaded liquidations, and usually this will reappear between week 1 to week 4, but it might be faster. Because remember, Vanguard and BlackRock will not be went down if they went down the ETFs through the open market. It's not going to be announcement, public news. One day you're going to wake up and you're going to read the headlines, and this has happened like over the weekend, right? The paperwork is done, everything is kind of filed already. And this will cause at least 50 to 60% complete market erasement, right? So this means that all the safe haven that a lot of countries around the world has been holding, gold and silver, will evaporate overnight. How? Federal Reserve, the new nominee, right? The Federal Reserve will hike to 10%, right? Will keep the inflation high, which will crush all the hedges on the market. This will force China and Russia actually to stop buying gold. Why? Because they need the actual dollars. They need the USD for their own home crisis. Don't get me even started on the forex market, where each of these countries will have its own local currency devaluation. Remember what happened when the war happened between Russia and Ukraine? The Russian ruble completely evaporates value. People, they had like their retirement accounts in Russian ruble, they went to zero, right? So don't underestimate the correlation between the foreign exchange markets and the prices of the precious metals. Then, when all the countries around the world realize, they get this wake-up call, oh my gosh, we need dollars to fix our home issues, right? Then you're going to see the silver collapse, right? After gold, which is like the most attractive and most stable precious metal, collapse, then it comes fall down for the actual silver. Look at this. The silver industrial demand dies. This will happen in maybe 24 to 48 hours. The global recession will also, fears from the recession will kill the solar electronics. 80% silver use of this, okay? So you're not only killing the price action of the silver, you're killing the demand for silver, but you're killing the utilization. There will not be use case anymore. Retailers will default. Why? Because they operate under specific agreements called forward contracts, which is at certain point in the future, I will buy this much at this price. But if the silver is down 60-70%, these contracts will simply be defaulted and it will be worthless early on. If you trade options, and if you know how the time value of the option eats out your value every single day when you go closer to the expiration, this is something very similar in the forward contracts. If you're more interested, you can go online and read more about it. But the ratio of the crash will be 150 to 1. And this is a time when the silver will be in free fall. And again, we're talking about, a lot of people say, but the government, other countries might actually pull out cash and buy the dip. I want you to understand that this is not only a gold and silver crash. This is a crash of trust and crash of hope. Because if you see the most prominent asset managers in the world, BlackRock and Vanguard, like them or not, we all agree on the same topic, that these people are sophisticated. They have information, they know exactly what is coming or what is happening. Things that we don't. And if these people are unwinding, they're selling gold and silver because they know that the new Fed chair will make the dollar king again, which, as you can see, the perplexity calculated. We don't have to guess. Perplexity calculated that the dollar hype strength, DXY, will go to 150 plus as the world dumps everything for cash. And a lot of people who are holding, gold and silver, and they're just reading the extremely bullish articles and videos, they cannot assume, they cannot comprehend a world where the dollar is king again. There is a huge demand for US dollar. Emerging market collapses. Everyone is dumping their own currency and they're trying to get some dollar. And just think about it. How likely is this to happen? Is this impossible to happen? I don't think so. Everything is possible, right?